Good morning, ladies and gentlemen, and welcome to the show on this Monday, the 14th of February, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's the thing, guys. This chart right here indicates the way I would have saw the markets going if the Fed had just not done anything to what they call try to fight inflation, which is a bunch of BS. I'm going to call it as BS. I think that what they're doing is not got anything to do with that's. I think, in other words, what I'm saying is I think that's a big excuse to fight inflation. I think that what they're doing is they know exactly what they're doing. They're speeding up the inflation. Look at this chart. This is what the stock market would have done if they had left it all alone. And I mean, with their stimulus measures, right? If they'd left it alone, the stock market would have continued to rise. But what they're going to do is create this situation. Now, look at chart B, this second chart I drew this morning. Now, these aren't anyway reflective upon the actual stock market. These are concepts, these charts. Conceptual charts to help you guys understand what they're doing and the impact it's going to have. Now, in this second chart, we see what they're going to cause is they're going to cause a market decline. They know they're going to cause a market decline. But if you compare this to the first chart, the second chart, you can see the end result is a much faster move up in the market, ultimately, than if they had just left it alone. Even though the market in the short term is going to go down. On the other side of that, it's going to rise. And it's going to rise unexpectedly and fast. It's going to go to the upside, but it's also going to stimulate the inflation. And this is what they're really after. You see, they've reached the end of this giant, enormous game, Ponzi scheme, that they're running. And they want the crack-up boom to get them out of the debt that they're in. They want to... See, there's only two ways this debt can go. One is a default where it's a deflationary default on the debt because the debt's growing so large. Or the opposite of that is an inflationary default on the debt. And I believe that they're choosing the second option, an inflationary default on the debt. But that means that the debt's going to get paid. It's going to get paid because your money isn't going to be able to purchase anything. In other words, they're going to steal it all. They're going to steal it all through a hidden tax called inflation. And this is what they really want. And by this whole thing about them fighting inflation right now, they're really stimulating inflation. It's a ruse, an enormous ruse to get what they really want, which is hyperinflation. Because hyperinflation is going to destroy the purchasing power of the dollar. You know, going back to a while ago, you know, Kyle Bass, he let the beans spill a long time ago. I think it was during the Obama administration. And he just said, well, they're going to kill the dollar. Well, it's taken a little while, and they're getting into the final stages of it now. But this is the only direction for them to go, is to destroy the dollar. This also gives them the big excuse to release their central bank digital currencies. And so by creating this little situation that they're creating where the markets will fall out of bed, it's going to give them the opportunity and an excuse to start up the printers again on the other side. So I'm going to tell you guys what. We're in for this directly in front of us, and it's going to affect assets across the board. And be prepared for this decline. But on the other side of this decline, we're going to get a steeper movement into hyperinflation faster than we would if we hadn't have had it. And this is all on purpose. doing this on purpose. They're robbing you. They're robbing the money right out of your wallet without taking it out of the bank. Your money will still be in the bank. Whatever you got, 100,000 or 1,000, it doesn't matter. It'll still be in the bank, but they're robbing that money from you because that money isn't going to buy anything very soon. And, you know, an awful lot of factors are helping them. And I don't see all of these things like supply side shortages and everything caused by a I think it's all manipulated. All these ports that are full of containers that can't move and everything because of government regulation. I think it's all them. And it's all in an effort to cause inflation. They want inflation. They want terribly bad inflation. Once the inflation machine gets going, and this is what they're trying to do, get it going. Well, they already told you. Look, they already told you. They said we have a 2% inflation target. In other words, we're going to push it up. We're going to get the inflation. We're going to try for inflation. We're going to get 2%. But I think that when they stepped on the other side of 2%, and it went all the way up to 7%, then they were like, behind the scenes, they're like, hoorah, we're doing it, boys, we're getting the inflation going. I think that they're really out for inflation, and all this is a big ruse about them not wanting inflation. What they really want is inflation. They want to tear the money out of your pocket without you even taking it out of the bank. Because the dollar store is now the, $1.35 store. Soon it'll be the $2 store, and then the $5 store, and then the $20 store. It's just like robbing you. Robbing you of the purchasing power of your money. We're being in a world, I'm going to tell you, the world I see out there right now is a world where criminals, which is basically what they are manipulating the system to their own ends. Everything's a manipulation. The markets are a manipulation. Gold and silver are manipulated. Everything's a manipulation. They're manipulating our lives even. Totally manipulating our lives. Constantly mandating to us what we have to do without asking us. And it's all a manipulation, pushing us in a direction that they want us to go through secret, clandestine meetings and talks that they have behind closed doors that we don't know anything about, where they set these agendas of manipulation and they're hurting us in directions that they want us to go. And if we balk, we say, oh, we don't want to go there all of a sudden, they're going to force us there with lines of guys in black suits to stand in a line and force us there into that container or box or chute or gate and line up that leads into the wherever they're leading us at this point, you know. And us out here, there's thousands of us out here who want our old life back. We want our old world back, and we don't trust them. We don't trust them. And for good reason. Are they showing us any reason why we should trust them? We have these worries out here. We have worries that they are becoming something monstrous. And when we express our worries about this in a meaningful way, and we say, hey, you know, we want freedom and stuff, and we want to have our old lives back, what do? They're silent. They're silent. My question is, are they silent because they're guilty? Well, let's move on. Let's get the charts open. Let's start the show with the charts open here. Right here, open the charts. Okay, we're going to take a look at stuff today. You know, silver price is up 20 cents. It's $23.77 today. It's up a little bit. That's good. I like to see silver go up a little bit because it's been so low for so long. I mean, it's just giving you wonderful buying opportunity, but sooner or later it has to go up. Gold's up too. $5.10 today. Gold's up. 1864. And now we're going to get in there. We're going to take a look at cryptocurrencies. Cryptocurrencies is just struggling to hold its own at 1898 billion, 1.8 trillion dollars, and it's at 42,611 for Bitcoin today. So we got the cryptocurrencies. Just they're doggy paddling and keeping their head above water for now. That's what the cryptocurrencies are doing in a market conditions where risk on is turning to risk off. And this is a risk on asset. It's turning rapidly to risk off right now because remember the first chart I showed you back there where it shows that big drop off in the markets? That's what we're actually headed toward right now. And we're on the front side of that. But on the other side of that, and it might only last a day or two. I mean, if the markets start to tear downwards, look, these guys out there, they're talking about an 80% drop in market, 70%. Ain't going to happen. Ain't going to happen. We're not going to go into the next Great Depression that way. But we are going to have a depression. It's going to be a hyperinflationary depression. It's not going to be a depression like the 1930s where we have a deflationary depression. At least I can't say, actually, I shouldn't say that. It's not going to be with such authority because the Fed is really in control over that, whether it happens or not. But let's just put it this way. I think there's only a very small percentage chance it's going to go that way. Deflationary depression. I think it's going to be a hyperinflationary depression. And in a hyperinflationary depression, how you have to play this is entirely different. In a hyperinflationary depression, which is what I think's coming, I'm pretty sure of that. Your play should be gold, silver, and cryptos. That's going to be your best play in a hyperinflationary depression. Perhaps if you're venturesome, you might want to check out explorers, gold and silver explorer companies, and maybe if you're venturesome, you might want to check out miners, and stuff like that. But if you do go in that direction, say you got a little bit extra money to play with and stuff, you got to do some research and due diligence to find out just exactly what you're going to do if you're going to go into miners or into junior miners or things like that, and things like you got to do a little bit of research. And you can make some good money there though if you do the due diligence or do research, on which ones are the best ones to get into, because when we start to go into a hyperinflationary depression, even if you don't go into the miners or explorers or juniors and all that stuff, even if you just stick with the real hard metal in your hand, you're going to do awfully well in a hyperinflationary depression. You'll have a little bit of money in your pocket when everybody else... Well, yeah, everybody's going to have money in their pocket. But the point I'm getting at is costs of things, it's unlimited how high costs can go on just everyday items. If you take a look at countries like Cuba and stuff, and this is where we're going here. So don't sell your old car. Don't let go of your old computers. Don't let go of this stuff that you have, things that you might have that you've been used to getting rid of, like your old computer. You used to throw it out in the landfill. Put it out in the garbage, Things that you have. Things are going to become valuable. Even old things. Because we're not going to get the constant supply from China we used to have of semiconductors and all these cheap cellular phones and all these cheap TVs and all. That's going to dry up. And we're going to be looking at a world where people have to fix things again. Where like, my grandfather was a TV repairman. There's a trade that's gone. Because people don't repair TVs anymore. They just throw it into the landfill and buy a new one. They're cheap, right? We might go back to times coming in the very near future where you don't throw things out anymore. If your washing machine quits working, you fix it. And this is the way it is in Cuba. who've been that way for a long time. Their car breaks, they fix it. They in some countries around the world, they're still driving cars from the 1950s. They're keeping them running because they can't get. If you can't get new stuff, you can't get a new TV. You can't get, because of the semiconductor shortage, might get worse or whatever. There might be wars might start pretty soon, and that'll even make the problem a lot worse. And what you might be looking at is days coming where the value of even used items, like we already see it happening with used cars, price shot up 40% in the past couple months. You know, this is what I'm talking about, guys. We're moving into a new world, a new paradigm right now. This shift is happening. And as we move toward the latter edges of this hyperinflation that's coming, that's when we're going to get the massive disruption in the system that's going to take parts of the system down. And that's what you need a prep for. That's what the preps are for, what your preps are for. So we got a lot of stuff happening, and you got to be prepared for all of it. Because we're moving into a turbulent world, and it's going to, so many people out there aren't aware of any of this. They're living in their own little protective bubble that's all about what's on their cell phone today, or what's on their computer today, where they're on their TikTok, they're on their different Facebook and all these different things, and they're not paying any attention. They're living in a little fantasy bubble. They don't know. They think everything's fine. They think the virus is going away now. They do know about the virus. Some of them are so in this bubble, they don't even know hardly about the virus. Excuse me. So that's the kind of world we're living in. Anyway, let's move on here and take a look at the Dow today. Down 254 points. 212 right now. 34,525. We're on the front edge of this movement down. This volatility is not going to end until the Fed changes direction. And they plan on changing direction. They just want to stimulate the inflation, which is what they're going to do ultimately. But so this little period we're going through right now is not going to last long at all. And what we're waiting for is that shift in the Fed. Crude oil, 93.56. Oh my goodness. Crude oil, soon you're going to be over $100 a barrel. And that's going to help stimulate the inflation. Drawdowns on crude. Tremendous drawdowns. There could actually, in the end, ultimately be shortages, crude oil. Like we're not getting used to shortages. Excuse me. I got a tickle in my throat right now. Anyway, let's move on here and let's take a look at bonds and rates. And what we're seeing right now is we're seeing massive rises in these bond yields, which we've been seeing for the last few weeks. This is what's going to crack everything right here. Told you guys several months ago, back when the U.S. 10-year was under 1.5%. I said if the limit is about 2.25 to about 2.5, I said that's the limit of what the Fed can do right now. Not only that, not only are they messing with the long end of the yield curve by pulling out and not buying anymore, but they're messing with the short end. They're going to raise rates on the short end. And so what we're going to do is we're going to actually see the long and the short end compress. In other words, yields on the short end are going to start to approach higher, while yields on the long end, and we're going to get a flattening out of this thing where it's because they're aggressive right now. The Fed's coming in aggressive to raise yields on the short end, on the ultra short end. They're going to raise the overnight rate. It looks. I've been hearing talk of a 50 basis point. I'm hearing talk of 7 raises of the overnight interest rate this year alone. 7. They want to bring this house of cards down so that they can prop it up on the other side and create more inflation. This is what they're really after. This is the end goal, is inflation. They want inflation. They want inflation to get them out of debt. They want to make the dollar worthless, and then they're out of debt. I mean, what's a million times zero? Zero. And they make the dollar zero. They want to end the dollar. They really want to end it, and they want to go into this central bank digital what's-it as a panacea for all of their problems. They're going to wreck the world because these central bank digital what's-its and all these, I see all these central banks around the world. Smaller ones are starting first. Smaller countries are starting first. They're talking about going all in hog for a central bank digital currency. And the larger countries are kind of biding their time a little bit. I think they got a time schedule set up for all of this, the central bank digital currency, but it's coming. And this is all part of the manipulation leading to this central bank digital currency, what we're seeing right now, what they're doing. Let's take a look now at the dollar index, 96.3. Oh, we didn't do the move index. And this is important. This thing is shooting up. Shooting up today. Shooting up right now. It's starting to shoot up toward 100. And so that means there's a bit of instability now in the credit market starting to pop up. This is another signal to the Fed that they're going to have to stop this soon. Because they could have a meltdown in the credit markets if this thing gets too high too fast. You got to watch out for that. Dollar index today, 96.34. It's exactly what I would expect the dollar to be doing. Strong dollar as long as they're being tight. Dollar's really going to start to slide when they quit being tight on the other side of this. The dollar's a kingpin, and they're going to knock the kingpin down. That's what they're going to do, and that's what's coming. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.